Hello, everybody. Thank you for joining our FAQ webinar for lot owners. I'm Matthew Savage from BCsystems. We're just letting a few last-minute stragglers into the meeting and we'll get going. I hope everybody can see and hear me okay. I do also have my screen shared. I've got some slides up on the screen. So if you can see those, great. If you can't, it's not necessarily a problem because it just shows the questions, but I'll read each question out as well. So if you're just listening on audio, then you won't miss out. So this is the first time we've done a webinar in this format. We did run a committee member webinar a few months ago, which was similar. It was me and a lawyer answering some questions and presenting a bit of a planned talk. So we thought that the next one would be good to get some feedback from owners on what your FAQs are, so we can answer them and make sure the content is relevant for you. So we are learning as we go, putting these webinars on and making sure you're getting, bang for your buck in attending them. So we do appreciate your feedback. We will ask you at the end for some feedback on how we've gone and what you'd like to see next time. So let's get into it. As I mentioned, my name is Matthew Savage from BCsystems. So I'm the Strata operations manager of the team at BCsystems. So I've been a body corporate manager for about 10 years, worked in property prior to this role, and I look after a few clients plus the team, the Strata team. So those are the body corporate managers and assistants who you are used to dealing with in our business. So I get the job of presenting tonight. I am doing Movember, hence my lovely facial hair, which is not how I normally look for those who have seen me before. So let's get into it. We've got about 70 questions from owners, which is fantastic. So the FAQ is only as good as the questions. So I just wanted to thank everybody for your time in putting those questions down. And I'll go through as many as we can in the time we've got allowed. We might run a little bit over. This webinar is being recorded, so anybody who misses out today can watch back, or if something is, wasn't clear and you wanted to see it again, then you're quite welcome to access the recording. And we'll also cut them into videos and use them on our social media. So you'll probably be seeing a little bit of this over the next few months. I mentioned we've got about 70 questions. I've tried to group them loosely into categories, so we're covering like topics at similar times. And I would very much encourage everybody on the line to use the chat function in the Microsoft Teams and ask any follow-up questions, or if I say something that prompts you to have a thought or a different opinion, please feel free to pop it in the chat and we'll get to as many of those as we can as well. So otherwise I'll get going. And on my screen, the first category we've got is financial. So I've grouped the like questions together on financial topics. We've just got a bit of a word map here on the screen. This will be no surprise to everybody. If you're looking at financials, you're talking about sinking fund, administrative fund, the levies, the fees, what they cover, how they're calculated. So we'll get into that, and then we'll go on to committee and then maintenance and approvals, and that's how we'll run the night. Okay, so the first question we had is about calculation and budgeting. So how the body corporate calculates expenses and bills owners. We've got some similar questions. So how are the levies calculated and what are the funds used for? So owners who have been in a body corporate for at least 3 or 6 months would have seen on their invoices administrative fund and sinking fund. So those are the two fund types that all bodies corporate have. You'll also sometimes see an insurance levy, but the principal role of the administrative fund and the sinking fund, the administrative fund pays for the ongoing operating costs of a body corporate. So if we were thinking about the body corporate as a household, that would pay for, putting fuel in the car, pay your electricity bills, your council rates, insurance, and any professional advice you get. It'll pay for your haircuts and your groceries. The sinking fund is the body corporate savings account. So that's where the building accumulates funds over a longer period of time. And those are reserved for capital expenditure. So in our household example, that is putting tires on the car, buying a new car, buying new furniture, buying a new house. So those are the two fund types. The way that the levies in those two funds are calculated are very different. So just like in a household budget, if you're looking at the administrative fund, the budgeting takes into account all of the expenditure that the body corporate will make or is likely to make in the year. And it divides that amount by the number of unit owners in the building. And that's pretty much how you arrive at the levies in the administrative fund. So it is a direct payment for the body corporate's annual costs. And that's why you'll see the body corporate levies gradually rising with inflation generally, because the body corporate is a consumer of goods and services. And so it is exposed to those same inflation pressures in the administrative fund. The sinking fund calculation is totally different. So the sinking fund is long-term savings. And that is based on a plan of what the body corporate needs to save up for and over what period of time. So if you've got a body corporate, an average body corporate, it will typically need to save up to replace things like the roof, the driveways, the guttering and the windows. So all of those parts of the building that have a lifespan or need to be substantially repaired or replaced, including painting. So those things in the sinking fund are put into a big plan, and then that amount is divided up over the number of years of the plan and then split among the units. So in the administrative fund, we had someone just ask for some examples. Great question. I probably forgot to give them. So administrative fund for a body corporate would pay for body corporate management. It would pay for the caretaking service provider or the on-site manager if your body corporate has one. It would pay for any repairs and maintenance throughout the year. So if the electrical system stops working and an electrician gets called out to repair it, that would be an administrative fund expense, as well as insurance, electricity or gas, the water to the complex, to the common areas, purchasing minor cleaning products, swimming pool maintenance. So anything that is either paid for on an ongoing basis or is not a capital purchase or a major repair of an existing piece of infrastructure. So the way that the funds work is anything that is specifically allocated to the sinking fund gets paid out of there, and anything else gets paid out of the administrative fund. So the calculation of those levies is different because the administrative fund budget will follow the body corporate spending year on year. Whereas in the sinking fund, just like household savings, if you're saving up $10,000 a year, every year, you save it up year on year. You don't only start saving it when you need to spend it. So you're saving in advance, which means that the money you're putting into the sinking fund, you may not be getting a benefit of that directly by maintenance in that same year. It may just be saving up for future. Question, how are the body corporate levy contributions split where you've got a complex with multiple different units, e.g. 1 versus 2 garages versus standalone houses versus wall sharing duplexes? So the way that the levies are calculated has reference to lot entitlements. Lot entitlements are basically like shares in the building. So in some complexes, each lot has one entitlement. So each owner has one share, which means all of the owners pay the same amount for everything. So if you've got 50 units and each person has one entitlement, the calculation is, total budget divided by 50, and that's what everybody gets billed. If you've got units where there are differences in the type of property or the use of the property, like in our example question, that is taken up in different number of shares for each lot. So if you've got two identical properties, one's got 1 garage and one's got 2 garages, you might expect the 2 garage dwelling to have slightly more entitlements than the 1 garage. So that way they pay slightly more for the levies overall, because they maybe have a little bit of an extra benefit in what those levies pay for. Those entitlements are set out in the community management statement where the bylaws are kept. So I've got an example of that. on my screen in a second. Go. So this is a community management statement, which would look familiar to many of you. It's got information about the body corporate, and then it's got a list of all of the lots, and it's got a list of all the entitlements. So in this particular example building, lot 1101 has 60 contribution entitlements, and the 1102 has 59. So I would infer by looking at that lot 1101 may be slightly bigger in terms of floor area than the next lot down. So that is how those differences or variations in lot type should be taken into account in the budgets. Now, those entitlements are set up by the developer. They are not always matching with the reality of the building, and it's technically possible to change them, but the change requires the consent of everybody in the building. So if you thought that your unit was paying too much and you wanted to pay less, that would require some other owner in there agreeing to pay more. So if there's 100 shares and you want to have less shares and pay less money, you'd have to get someone in the building to take your shares off you, which means they would pay more. And for that reason, it's pretty much impossible to change contributions, and therefore they stay the same typically forever. So that's how they're set up. It is part of the disclosure process that you go through when you're buying a lot. So you should be able to work out what your levy exposure will be based on the number of entitlements you've got in the building versus the whole. Costs increasing. So why the body corporate costs are so high? Why, what, and who decides on strata fees increasing by 8%, and why the administration fees so high? So body corporate levies, because they're collecting for multiple things, are subject to all sorts of cost pressures. Just like in a household budget, nearly all the things that you buy get expensive year on year. That's just how inflation works, and we all know that from doing our own personal finances. The body corporate is exposed to those same factors. So the body corporate is purchasing electricity from someone like Origin. It's purchasing insurance from an insurance company. It's purchasing, pool salt. So when there was a run on pool salt after the floods in Brisbane, all the pool salt got more expensive, and that is something that the body corporate is, having to deal with, just like any other person in the market. So those costs are all normal, and we would expect, based on that levies would at least increase in line with inflation, because that's really the nature of inflation. In addition to that baseline level of increase, the body corporate insurance is quite specialized and can fluctuate much more significantly than you would expect in something like house insurance or car insurance. So in a body corporate environment, because the risk is so large, the insurer is insuring maybe 60 townhouses in one package, and those 60 townhouses might be making claims, or they might be, experiencing some maintenance issues. That can cause the premium to rise by, 10% or 15%. So if that scale of increase happens in insurance, that is paid by the administrative fund, and the administrative fund needs to rise so it's covering the cost of insurance. So those are the sort of ongoing reasons why the levies might increase. In the sinking fund side, the sinking fund is a savings fund set based on a target. As the target moves away, the levies need to increase to keep up. So if you were predicting painting for a large building 2017, and then you review that now, the painting would be significantly more expensive now than you thought it would be in 2017. So in 2017, you might think, okay, in 2022, painting will cost 100 grand. But by the time you get here, because the cost of materials in the construction industry have skyrocketed, and we've got constraints on labor and materials due to COVID and the knock-on effects, that painting job that you were saving up to spend 100 might suddenly cost 150 or 200, and that takes a huge chunk out of the sinking fund. And so the sinking fund levies need to increase to fill that gap. So the way that you experience levies as owners is you see a quarterly or a 6 monthly amount, and you'll see that changing year on year. But the question here of, who decided that it would be 8%, nobody sits down and says, okay, it needs to go up 8%. We sit down and look at what are the administrative costs and what is the levy in that area, what is the sinking fund recommended balance, and what is the levy for that, and what is the insurance doing, and what's the levy for that. And we add all those things together, and then we present that to owners and say, this is where this is where your money's going and what you need to spend to keep in the black. Got some other questions here. What are the difference between the lot entitlements and contribution entitlements? So I mentioned entitlements earlier, and I did show on the screen an example of the community management statement. So you'll see that each lot has two types. So contribution and interest. Contribution is the most important day-to-day. This contribution sets the administrative fund levy and the sinking fund levy. So if we look at somebody that's got 60 entitlements, so there's 60 here and 60 down here, those two people would pay exactly the same levy as each other for the administrative levy and the sinking fund levy. The interest schedule, which is the second schedule, this deals with the cost of insurance. And it's a separate schedule because owners who have an equal share of the maintenance may have an unequal share of the insurance. And the rationale for that is that, if I can give you an example, I'll take this away so that it's not distracting. If you've got a high-rise building where every apartment is identical to one another, an apartment on a higher floor would have a higher market value than one on the ground floor because it's got a nice view of the city. So that unit, it would pay an equal amount for the use of the swimming pool because it's the same size as all the other units. But for the purpose of insurance, the interest schedule recognizes that that unit is worth more because it has better view, it's on a higher level, and the owner would have paid more for that unit. Therefore, that owner should pay more for insurance than an owner on the ground floor, because if the building were to burn to the ground, that unit at the top would get more of the insurance payment because it has more value than the ground floor unit. So they can use the same amount of, lift maintenance or swimming pool maintenance because they're the same size, but they can be different in terms of insurance. And that's why some buildings have a different set of numbers for the interest schedule lot entitlement. So two buildings that have the same contribution may have slightly different interest schedule lot entitlements. Got a question. We also pay fees to BCsystems who pay our on-site managers. So that's a good question. It's sort of right. So the way the levies work, BCsystems is paid by the body corporate. So we charge the body corporate a set fee. The body corporate pays us, and that is one of the costs that the body corporate pays. So we are in the list of expenses like the insurance company and the electricity provider and the pool maintenance person and BCsystems or any body corporate manager. So we don't get paid the actual levy amount. We get paid as a consultant, and we do the work on behalf of the body corporate. If your building has a caretaker service provider, or they might be called an on-site manager or a maintenance manager, that person is not paid by BCsystems. So they have no relationship with BCsystems at all. So if you've got a body corporate where the spending is $100,000 coming in, all of that money goes into the body corporate's own bank account. It doesn't come to BCsystems at all. And out of that 100,000, the body corporate might pay BCsystems $5,000 for body corporate management, and it might pay the caretaking service provider, $45,000 for on-site maintenance management, and then the rest of the money was paid all the other expenses in the building. So that's generally how that works. Okay, so administration fees so high. Why are the administration fees so high when you're already collecting sinking funds to maintain the needs around the building? So this question I included because the administration fees are, it's called the administrative fund, but that doesn't pay for the administration. The administrative fund pays all the ongoing costs as we discussed, and the sinking fund is specially reserved for the major capital items. So it's a bit confusing because the law calls it the administrative fund and we do an administrative job, but those two things are not the same administrative word, if that makes sense. Drawing comparisons. So why are the body corporate fees so large in comparison to similar townhouse complexes with similar amenities? And the broad question of why are the fees at this building higher than any other building in the area? So drawing comparisons between buildings is very difficult because no two buildings are alike. Each development is set up by the developer. It's usually custom designed. It has a specific number of units or lots in it, and those are all different. The way it's landscaped is quite different or can be quite different. And in addition to the physical differences, there are differences in how the building is set up legally. So some buildings, the body corporate has more involvement in the building. It pays for more things and it does more maintenance. And consequently, the levies are higher because the body corporate is spending more money. So that can be a trap to think about, my levies in my townhouse complex are higher than next door. That could be true, but next door, maybe if the roof leaks, that owner has to pay for that themselves. Whereas in your building, the body corporate would send a plumber and fund that on your behalf. So it's very difficult to compare. The other element that has an impact on that is the number of lots sharing the cost. So if you think about two townhouse complexes, one's got 30 townhouses and one's got 60 townhouses. One's obviously a lot bigger, but they might both have one swimming pool each. So in the smaller townhouse, when that swimming pool needs a pump replaced, that cost is being divided by 30 owners. Whereas in the larger one, it's got one swimming pool, the same pump is divided by 60 owners. So each owner pays double in the smaller complex because there's just less people to share the cost. So that has a big impact as well. And people tend to say to us, it's in a small building, why are the costs so high? But in a small building, the costs are divided among fewer people. So the cost might be smaller, but something that is a fixed cost. So lodging the income tax return costs a set amount of money, no matter how big the building is. In a really large building, that cost is divided by a lot of people and becomes a minuscule amount. Whereas if you've only got 3 or 4 owners in your building, you're paying much, much more for the same service because it's not based on the size of the building. It's just a set fee. How can we reduce the strata fees by eliminating current costs? So I like that question because the questioner has really answered it for themselves. Eliminating the cost is how to reduce the fees. So if you're in a body corporate and on a committee and looking at ways that the levies can be reduced, I would think about what the body corporate is prepared to sacrifice or able to sacrifice. You generally can't change your insurance requirements or the fixed contracts, but if your body corporate is spending a lot of money maintaining a beautiful water fountain and it's getting older and its maintenance costs are increasing, maybe the body corporate decides to get rid of it, put pot plant there instead and save on the maintenance cost. So there's no savings for free. Something usually has to give. And the reason for that is the body corporate doesn't make a profit. So it's already only collecting exactly the right amount of money to pay for the bare minimum of what it, the stuff that the complex has. So it's not an easy task, but that's really what you've got a committee for. And that's why those budgets are prepared every year. And the committee looks at them every year and has the opportunity to say, can we cut back a little bit on the spending on legal fees or whatever it is. I realize we're spending a lot of time on financials. It is sort of the most complicated area and has the most detailed answers, so we will get through it. Specific costs. Who pays for water usage, the tenant or the owner? Importantly, usually the body corporate doesn't pay. So most buildings either based on the local council area or the local water provider, they typically bill it to the owner. And then it's up to the owner to charge that onto the tenant if they choose to. And there's some requirements about whether the premises needs to be separately metered and water efficient. So we've actually got on our website quite a detailed article about separate water metering, and I would refer people to that resource. Do you pay council rates from the levy? So the answer to that is no. All councils, as far as I'm aware in Queensland, they rate the unit owner separately. So the body corporate doesn't pay rates to the local council. So if you're an owner in a unit, you pay your body corporate levies, and separately you pay your rates to the local council, and the body corporate does not pay rates on its own. So it's not considered a landowner. It's just a shared structure for all of the landowners to, pool costs and make group decisions. Sinking fund. Does a sinking fund forecast have to be conducted by a quantity surveyor, or can one be constructed based on past events? Body corporate has been in existence since the late 1970s, small body corporate with 6 lots. So under the law, the sinking fund forecast does not need to be produced by an expert. It just needs to be produced, and it needs to have regard for the future expenditure of the building. So the sinking fund forecasts that are prepared by quantity surveyors are very good, and they're very detailed and usually pretty accurate. If you have someone on the committee who is able to produce a report to the same degree of accuracy, then by all means, the committee could consider that. The risk, however, is if the sinking fund writer, if the volunteer does it and doesn't do a very good job, the body corporate levies might be set either too high, in which case you're putting money in, but then the body corporate doesn't have anything to spend it on and you can't get it back. So you're overpaying in the sinking fund. Or typically what happens is that levies are set too low because the person may have been a little bit optimistic in setting the levies. And then when maintenance work does arise, there's not enough money to pay for it, and that special levies are needed to catch up to where the body corporate needs to be. If there's enough funds in the sinking fund to cover proposed works, why is there a need to have lot owners pay a special or an extra levy for the works? So in the sinking fund forecast, as I just mentioned, they allocate a certain amount of money to each individual item in the sinking fund. So in a sinking fund with a balance of $100,000, there might be an allowance of $20,000 for the pool, $10,000 for fencing, and $70,000 for driveway or whatever you've got. So if you've got one single project that either comes up and it was not anticipated, or it comes up much earlier than expected, the body corporate has to collect that money by a special levy, because the alternative is you borrow money that you'd put aside for the driveway and you spend it on the pool, but the driveway still needs to be repaired. So when the driveway comes up, then you won't have enough. So the idea of the sinking fund is that it is only collecting for those specific items, and it doesn't become a general sort of slush fund where it can pay for any expenses, because the nature of the sinking fund has to be allocated for specific items over the next 10 years. Sinking fund balance and future use allocation, I think we've probably addressed that. This question I think I've got on here twice. We've answered that one already. We've answered that one. Okay, flood levies for units that don't have cover. Are there terms of reference set up to manage the costs? What do bodies corporate do? So I think this question might be about Brisbane had a flood, as I'm sure everybody knows, in early 2022, and some buildings either did not have flood insurance, or the building knew it would flood and therefore flood insurance was either unavailable or extremely expensive. Sometimes a building that has $40,000 of insurance each year might have to spend $300,000 or $400,000 a year to get flood insurance. If the insurer is pretty confident that your building will flood, it doesn't want to give you insurance for something that it knows will happen. So those buildings, some of them are considering setting up an additional levy and an additional fund, and basically saving up separately to the sinking fund an amount of money that it acts as self-insurance. So if the flood occurs, they can spend that money on fixing the flood damage or improving the building so that the flood damage is less severe. And the reason that that would be separate is because the sinking fund is reserved for the maintenance of the building, and flood is something which is not anticipated in that forecast. So buildings can make additional levies for flood resilience or a flood fund. The management of that would be governed by the committee. The spending out of that flood fund would be governed by the body corporate, the same way that any major spending is controlled. And owners would be able to see on the financial statements how much is in the administrative fund, the sinking fund, and then the third fund, call it the flood fund or the resilience fund. That's something we're seeing more and more, and we're recommending to those buildings where they can't afford or can't get flood insurance is to start putting money aside for the next flood so that they're not in a position where they've got a lot of costs and no money to pay for them. Would like to know how the insurance for Strata works. So Strata insurance typically covers the buildings in the development, the physical buildings. So it doesn't ever include carpets or furniture or cars or anything that's not a part of the building. There are some schemes or some developments where the body corporate does not insure the buildings, and in that case each unit owner insures their own townhouse or house. If the general rule of thumb is if you're in an apartment building, a high-rise or a low-rise apartment building, the body corporate will insure the building. If you are in a townhouse complex where townhouses touch each other, so if you've got duplexes or triplexes where there's a couple and they've got a shared wall, the body corporate will insure those. The question will arise if you are in a fully standalone townhouse that is freestanding and doesn't touch anybody else, or if you're in a house within a body corporate development, and again, it's not touching any of the other lots, that's where you'd want to check that the body corporate does or does not cover your building. So otherwise, it's building insurance, which is all different depending on what the building's worth to rebuild, how complex it is, what level of valuation it has, and the difficulty in rebuilding it if it was destroyed. And then there's policy excesses and inclusions and exclusions. So each building will have an insurance certificate, and that will be available on our website for BCsystems clients, or it should be in your AGM agenda each year as well. And that'll take you through some of the basics, but that's a whole topic on its own. Other one, does the body corporate public officer have to be registered? So body corporate does have interactions with the ATO. If the body corporate is has a turnover of levies of more than $150,000 per year, so if the levies of the administrative fund, sinking fund, insurance added together are more than 150,000, the body corporate would be registered for GST, and it makes taxable supply to lot owners in the form of levies, and it claims the GST input tax credits on expenditure. The body corporate manager, or BCsystems, manages all of that. The public officer for taxation is a staff member of BCsystems, and that is registered with the ATO, and we lodge those business activity statements if it's GST registered, or income tax returns if it is, or for all buildings lodge an income tax return as well. So yes, it's registered and we do that. That's the end of our financial questions. So I've got a couple of questions on the fly, which we'll go through fairly briefly. So when body corporate systems send out auditors to check as per legislation, what risk analysis is undertaken to ensure they're competent and not just doing a tick and flick? That might be a question about physical on-site safety audits, but I'll answer it for financials as well. The body corporate accounting is done by the body corporate manager and is disclosed to owners, and owners each year choose whether or not the body corporate accounts should be independently audited. And so that's why you'll have an audit motion each year on the AGM. The default is to be audited every year unless the owners choose to skip the audit. There's no requirement to audit or not. You just have to consider it each year and let the owners of the body corporate decide. And the requirement for an auditor of the financials of the body corporate is that they must be a qualified auditor, not just someone's friend. And they can't be the body corporate manager, any of the committee members, or the caretaker, or any associates of those people. So it is a fully independent audit. Keep popping those questions into the chat, and I'll try and get them when we get to the next most similar category. So we'll go on now to committee membership, meetings, and responsibilities, and we'll talk through that. So what are the roles and responsibilities of the committee, the on-site manager, and BCsystems? So I probably touched a bit on this in the financial section. The body corporate, firstly, the body corporate is not any of us. So the body corporate is the owners of the building. I haven't explained that very well. So think of the body corporate like a company, and each unit owner is like a shareholder in that company. The committee is like the company's board of directors. So they get elected each year by the owners in the body corporate. And then separate from the body corporate can take advice and assistance from contractors. So one of those would be the on-site manager or the caretaking service contractor, and the other one would be BCsystems or the body corporate manager. So the body corporate is the owners, and the body corporate manager just provides administrative services, and the on-site manager is a contractor, and it also provides services into the body corporate. And a lot of the time, this is not well understood by owners who think that the body corporate is sort of an entity that they're not part of and they need to interface with. But in fact, like a shareholder in a company, the company relates to all of the owners together. So you've got like a flock of sheep or a school of fish or a body corporate of unit owners. So that's how to think about body corporate in general. The role and responsibility of the committee of the body corporate is to make the day-to-day management decisions. As I'm sure you can appreciate, if you've got 70 unit owners, it's very difficult to get them to agree on things. So that's why they elect a committee of up to 7 members, and those people make the day-to-day decisions. That is to avoid needing to go to all owners every time a decision needs to be made, which would be very impractical. So the body corporate is all of the owners. The committee is the elected group each year, and the body corporate elects them through the AGM. The role of the on-site manager or caretaking service provider is defined in their contract, and those contracts are all different, but generally speaking, they have responsibilities to carry out administrative work for the physical building, so organising contractors, getting quotes, talking to residents, monitoring bylaws, and also carrying out work, so doing the gardens, cleaning the pool, doing minor handyman repairs, so fixing fence palings that have fallen off. So those are typical responsibilities of the caretaker or on-site manager. BCsystems it's predominantly an accounting role because a lot of our work is accounts based. As you can understand, there's lots of payments coming in and out of the body corporate, all of those tax obligations I mentioned earlier, as well as the financials and audit and the disclosure process to buyers and sellers and insurance. So we do a lot of accounting. We also run the body corporate's meetings, and we help to guide the committee as to what they should be doing, what they should be thinking about, and how they should make decisions among themselves. And a lot of that is giving advice. If the committee says, well, the on-site manager says, this issue has come up, what do we do with it? That's where the body corporate manager can say, that quotation is within the committee's limit and the committee can approve it. So why don't you guys have a discussion and make a decision, and then we will document that and inform owners. So we do a lot of the accounting and basically the PA work to the committee. And it's also probably important to just reiterate that the committee, the on-site manager, and BCsystems are 3 separate parts of the system, and the committee's at the top. So BCsystems reports to the committee, and the on-site manager reports to the committee. The on-site manager or caretaker does not report to BCsystems, and we don't report to them. So we're two contractors, both of which reporting into the committee. And both of us have contracts, and it sets out what we're going to do and how much we're going to get paid. So it's all transparent. And if you've got specific questions of who does this particular job, if you ask us, we will guide you. Because we have the role of holding the records, we also have the on-site manager's contract, and we have the bylaws, and we have the financials. So we often give out that information, but not because we are the boss of the site. It's just because we've got the information and it's our job to give it to you. So the second question is pretty much the same as that one. Next one, do all complex caretakers have different roles? Yes, they do. They all generally do the same function. As I mentioned before, it's physical property, keeping the committee appraised of how the site is being run and what is happening on the ground, and also doing the work that's required on site. The actual ins and outs of exactly what they do is all different. They're all custom written agreements for individual buildings. So you do need to have a look at what your caretaker is being employed to do. One of the main differences is some agreements, the body corporate provides the tools and equipment and the materials, and in some contracts, the caretaker provides those. So some caretakers, the body corporate gives them a lawnmower and they just push it around. And in other complexes, the caretaker brings their own lawnmower and pushes it around. So there can be quite a lot of differences that make comparison difficult. And it is important to check that before we go off and start discussing, who's doing what in the site, because they are different. What is the process when the committee feels the strata manager is not giving independent advice? So I would say on this topic that the body corporate manager is really generally impartial and works on behalf of the whole scheme as a group. Certainly, the body corporate manager works closely with the committee, and sometimes that means the body corporate manager has to tell the committee things that the committee may not want to hear, or might be playing the devil's advocate. So if the committee has an idea, the body corporate managers might start bringing up and suggesting that there might be some risks with that idea or some costs, and have you considered, X, Y, and Z in the process of making that decision. So it's normal for there to be some healthy discussion and honest discussion between the committee and the strata manager. If you're in a building where you don't feel that that is occurring, I would say talk to the strata manager firstly, and secondly, talk to the business that you're dealing with. If it's a client of ours, I would like to hear about that on any buildings. If the committee feels that the current strata manager is not working independently or not working for them in the right way, and it could be a misunderstanding, or it could be something that we needed to look at. But it's often the case that sometimes where we appear to be advocating a position, but that's not because we have that opinion ourselves. We generally don't mind what the committee does or what the owners do, because they should be self-governing. We're just trying to keep that process within the legislative guidelines so that it doesn't go off, into a dangerous area and expose the committee to potential legal liability or risk losing insurance cover. So that's what we're thinking about when we're answering questions. Who decides when a body corporate meeting will occur? So the body corporate, at the very minimum, must have an AGM each year. So anything that's an AGM or an EGM, the G is for general meeting, and that is all owners. So all owners are always invited to the AGM and any EGMs that happen throughout the year. That's where you vote on the AGM stuff every year. You elect the committee, you approve the levies, you approve the insurance, and you make major decisions that affect the whole site. Separate to the general meetings, the committee can have its own meetings as well. There is no rule about when the committee needs to have meetings. So each committee has different practices. A lot of committees will have quarterly meetings, which is not from any legislation. That's just because, there's 4 quarters in a year, and it's a good way of keeping projects moving so that they don't go on forever. And there's constantly a review period where we all get together and say, how did you go Bob, with that project you're working on, did you progress it, or do we need to keep working on it? So up to the committee. If the building isn't particularly busy at the time, the committee can say we will just defer the meeting and we'll just have it when we need it, and then we'll just see how it goes. And sometimes buildings can go, 12 months with nothing happening, and then the next 12 months will be incredibly busy and they need to have 6 meetings. So it's really up to the needs of the building. We certainly don't want to have everybody sitting around a meeting if we've got nothing to talk about and we're wasting everybody's time and you prefer to be, eating dinner. So we just try and use them as needed. If a person is nominated and voted onto a body corporate committee, what is involved and how much work does it take? So the answer to that is it depends on the building. If you are in a building that has a lot going on, then there is a fair bit of work to be done on the committee, because the committee is like the board of directors. So if you were a board of directors member for Telstra, I'm sure you would be busy mostly all of the time. If you are on the board of directors of a company that didn't do much, you probably have a lot of free time. So it really depends on the building. The basic work of doing the accounting, we do the meetings, we do the agendas and the minutes, and we do the paperwork and the coordination, but we're not decision makers. We're specifically blocked from making any decisions. So that in the law it says the body corporate manager can't make any decisions. It all needs to be the committee. So if you've got lots of decisions to make and those are complicated, you'd have to, get quotes and read them and read reports and do work. But it's based on the building. And I would say that most committees, most of the time, generally don't have a lot to do unless an issue arises. So you don't generally need to be very proactive. Mostly you can, look around the building. If everything appears to be going fine, you don't need to worry. And if you've got a good body corporate manager and a good on-site manager, they will bring things to your attention and say, hey, the light's broken. Here's the quote. Do you approve it? Yes or no? You make a decision and that's it. The body corporate manager of your building will be able to tell you how much work's involved in it, because we would be doing it and we would know. It's FYI. Okay, can a vacancy on a body corporate committee be filled at any time? So body corporate can have up to 7 members on the committee, with some limited exceptions, but generally 7. The body corporate manager, so me or one of my team, is automatically a committee member but non-voting. And also the on-site manager or caretaker is a committee member but non-voting. So you can have 7 actual voting committee members. So 7 owners can put their hand up to be on the committee. Plus you've always got us and you've always got the caretaker on a committee. At the AGM, if the body corporate elects 5 members, say, to the committee, and because there's only 5 people who want to do it, and then one of those people might sell their unit in the year, or they might, get too busy with work and resign, the body corporate committee then chooses another member in the building to join that committee and fill the vacancy. So a vacancy, if it arises throughout the year, can be filled, and the appointment is made by the other committee members who are still on the committee. So they can choose who works with them for the remainder of the year, and then every position is re-elected at the AGM. So the term of the committee only ever lasts for 1 year. Decision making being made by email. How do we speed up the process to reach a decision? Good question. If I knew the answer to that, I would have a lot less work to do, probably. So it depends on the decision and how complicated it is. Something we've implemented in recent sort of year and 6 months at committee level is making decisions by electronic voting. So that Strata vote system that most of you will have experienced. We put motions to the committee there and the committee members can say yes or no to each motion, and it comes back to us and we action it. So one of the difficulties we have with email is some committees can tend to be too go with the flow type people. So if you've got 7 members, we need to get 4 actual instructions. So we need a majority of the committee for every decision. So if you send an email out and 1 or 2 or 3 people answer it, and then maybe the fourth and the fifth person say, I don't mind, or I'm happy to go with the flow, that means we don't have a majority and we have to go and follow those people up. So giving clear instructions is a good way to actually get decisions made more quickly. From an owner's perspective, the more information you provide up front in your request or your issue or whatever it is you want decided, that will give you a better outcome, hands down. So I've never seen a committee say, we've got too much information from this owner. Usually they say, we don't have enough information. We're not going to make a decision at all. Can you go back and ask the owner to provide more information? And that just adds time to the whole thing. So more information up front allows the committee to review the information and just make a decision, a yes or no answer to whatever it is you've proposed. A quorum, so minimum ratio owners to strata management for a quorum. So for committee meetings, if there's an actual meeting of the committee, so like we've all gathered together at a particular time and day, you need to have at least half of the committee members present in order for there to be a quorum, and then those people make majority decisions. If you have a committee meeting and no one comes, or not enough people come, so less than half, then the meeting it just doesn't occur. It has to be deferred to a new time. For other committee decisions made outside of a meeting, so anything by email or by electronic voting, we need a majority of the committee members all to be in agreement. So if you've put out a option A and option B, you need to have at least 4 out of 7 people pick one option for it to be approved, because it's a majority system. For meetings where owners participate, so like the AGM, the rule is that 25% of the owners need to have voted, and then you need to have actually 2 people present or via Teams so that you can have a discussion. You can't have a meeting with yourself. So there's 2 parts to a quorum. It's 25% of the owners need to have voted either electronically or by paper or turn up to the meeting, and you need at least 2 people at the meeting. If you don't get a quorum for any meeting, it just gets adjourned. So the meeting still happens, but it pushes the time back by a week for a general meeting, and it gives late owners the opportunity to put in late votes and have them be counted. And if that happens, then at the end of the week, you just go with whatever votes you've got. So it is quite usual for a building with 100 apartments to only get 10 votes at the AGM, which means you're not getting a huge representation of owners, and it can mean 1 or 2 votes can make a difference to the outcome of a lot of different things. Okay, more on committee. So I'll go through these ones relatively quickly. I brought a villa unit in a block of 3. The previous owner used to self-manage. At this time, none of the owners have assumed corporate or committee responsibility. The other 2 owners are quite difficult to be approached. So if you've got a body corporate and it doesn't have committee members, that's a problem, because it has to be self-managed by the committee. The body corporate manager, as much as it would be easier for us to make the decisions for you, it's not our money, it's not our, we don't have a stake in the outcome, so we aren't able to make decisions. It is necessary for the committee of those small buildings to actually work together. Some small buildings can get away with having 1 committee member, so it would depend on the legislation that applies to your building. But it's just part of life that not everybody who buys an apartment or buys a townhouse wants to participate in how it's managed. So I don't really have an answer for that, except it's got to be tried, because the alternative is the body corporate can end up in what's called administration, which is where, it's like if a business goes into administration, someone comes in and makes decisions for you and spends your money, and you probably won't like it. What options does a committee have if an AGM motion is difficult, impractical, or has unintended adverse consequences? Committees have to carry out instructions given at an AGM. So the ownership of the body corporate overrules the committee. So if you ever have all of the owners voting and a committee has a different opinion, the committee has to follow the owners. But that said, if an AGM motion turns out to be, difficult, impractical, or has unintended consequences, the committee could call another general meeting and say to owners, you just made this decision, but we went to try and implement it and we realized it's going to cost, $1 million instead of 10,000. So we want you to make a different decision and change your mind or change the approach somewhat. So the committee has a role in delivering the outcomes, but it can always go back to owners and ask owners for consent to do different things. So it's just like a form of government. If you think about Australian political life, if we have a referendum on something, that's where all owners or all Australians vote on a matter, and that tells the government what to do. So it's the same way with the general meeting. Anytime all owners are activated, they are the higher authority than the committee. How do I demand that the body corporate action an item from the last AGM for a motion that had a majority vote, but the body corporate and committee still hasn't done anything? So the committee has to carry out those decisions if it can. Some decisions can't be carried out. I would say that if you're an owner who has put forward a motion and it's been approved, then you've got an interest in checking that it gets delivered on. It depends how clear your motion was. So some AGM motions will say resolve that the body corporate install a swimming pool, full stop. It doesn't say where it's going to go, how big it will be, what color it will be, whether it's going to be in the middle of the driveway and whether it needs approval, blah, blah, blah. So there could be reasons why something hasn't been done. Just because an owner hasn't seen it doesn't mean it hasn't gone anywhere. But the owners also always have an opportunity to make disputes with the body corporate. And this might be an opportunity or an instance where a dispute about a failure to deliver an outcome might be the best way of bringing that to a head, only if you've tried writing to the body corporate committee and they haven't given you, a response that is to your satisfaction. If a question has been voted in the negative by the owners, can the same question be posed to the committee and voted in the positive, as this seems to circumvent the desires of the majority of the owners? So I use my pool example. If an owner put a motion to all owners at an AGM, move to install a swimming pool, and that did not get approved, so more people said no than said yes, that doesn't mean the body corporate can't approve a pool. It just means that when the owner put it forward, it wasn't successful. So it might be that the owner takes that motion away and changes it a little bit, so it gives more information or more clarity about why they want to do it and what the cost will be, and gives it back to owners to try again. That's fine. If an owner has put something to an AGM and it is defeated, but it is within the committee's ordinary powers to do that thing, the committee could still make that decision. So if you put a motion up, the body corporate buy a new broom for $10, and for some reason owners said no, that wouldn't prevent the committee from buying a broom if they needed to. They could still use their power to do that. So it doesn't necessarily block the committee, even though the questioner is right in that it probably, on the face of it, it would appear to not represent the majority will of the owners. That's a situation that honestly doesn't arise very often, but it would depend on what the motion was and how serious it was. How many portfolios does one body corporate manager tend to have in an average company? Is everyone inundated in our current post-COVID world? The answer to the last part is yes, everybody is inundated. A lot of that is difficulty in getting contractors, and everything takes more time, and that just adds time to the equation. The portfolio question is interesting because it depends on what the building's like. So if you had a whole lot of small buildings, they really didn't do very much throughout the year, and they just had the basic accounting, AGM, committee election and some compliance work, one body corporate manager could manage 50 of those. But if you were talking about a building with 250 apartments and a swimming pool and a Coles shopping centre in it, you definitely couldn't have 50 of those. You could probably have 5 or 10, depending on how active the committee was. So there's not an answer for that. It depends on what the building's like and how many, how experienced the manager is and what level of support they've got. So even in our team, people all have different numbers of buildings, and it's a real challenge to suit a manager to a building with similar sort of skill sets and working styles. And also we've had the experience just recently where buildings that were ordinarily quite low maintenance and all had, they had a really good working relationship among the committee. They functioned really well. Those buildings then, got flooded or something major happened to them, and they've gone from being a 1 or 2 difficulty to a 10 difficulty. And that can happen in any building really at any time. And we deal with it as a service provider, but so does the committee members and the owners. Okay, power of owners. So how to approach body corporate to have repairs done. I should comment as well, it's just gone 7 o'clock. So I'm happy to keep going because I've not got too many more things to get through. If anybody is needing to go and eat dinner, you're welcome to jump off if you want to, but I'll keep going. And we are recording the webinar so we can send it out afterwards if anybody, feels they've missed out. But I'll keep going for now because I think we'll be able to get through it in a reasonable time. Okay, so power of owners, how to approach the body corporate to have repairs done. As we discussed earlier, the body corporate is the owners. So I'd say the first thing is if you've got a caretaking service provider or an on-site manager, raise it to their attention because generally monitoring maintenance, quotes and contractors is part of their duties. If you don't have that type of contractor in your site, you can raise that repair question either with a committee member if you know who they are and they live on site, or you could send it to the body corporate manager. And the more information in there, the better, because body corporate managers don't necessarily know all of the ins and outs of every building because we're not on site in every building. So photos are good. If you've got a maintenance issue that relates to your particular lot, maybe get a quote and say to the committee, here's the quote, can you approve it? It makes it a lot easier for the committee to just say yes, rather than for the committee to have to start the process of asking for quotes and talking to contractors about what needs to be done. So if it's something that you've raised as an owner, you're probably or possibly in a better position to get a quote. You can then have control over what the quote is for, and then you probably get a better outcome at the end. But sending it to the body corporate is certainly the right way to go about it. Depending on the cost of the quote, we would give advice to the committee about whether it's within their limit, or if it's a really big repair, it might need to go to a general meeting of owners to approve. It depends on how much it's likely to cost. And then we can come back to you and say, it'll get looked at by the committee, or it's going to need to wait until a general meeting. And we'll also look at how urgent it is and if we need to call a special meeting just to consider it, or if it's something that could be done, in 4 months' time at the AGM. In terms of how to go about that, we also have on our website, and other body corporate managers will have this as well, though not as good as ours. We've got motion submission forms. So if you're an owner, you can submit a motion directly to the committee, or you can submit it to the AGM. And those are available on our forms part of our website. And it asks you, have you got a quote? Yes or no? How much is the quote? Attach it. So that sort of guides you as to what information is useful to provide. And then that formats it nicely, and we just then forward it to the committee, and it just makes it a little bit easier and takes some friction out of the process. How do we change the property manager? So assuming that this relates to the caretaker or the on-site manager, the caretaker on-site manager role in the building is typically on quite a long-term agreement. So in Queensland, those can be up to 25 years in length. That's not to say that you're going to be dealing with, Bob and Susan for 25 years. They would have a long-term contract, but they typically would sell that contract after they've been there for a while, just like you buy a house, but it doesn't mean you're going to live there forever. So it's up to the manager, the property manager or caretaker, to decide when they sell and they then transfer their interest in the agreement to a new manager. And the committee has a process through which it gives consent to that. And there's an interview and some, resume type activity that happens at the committee level. If the body corporate is dissatisfied with the caretaking service provider, that's a conversation to have with the committee and with the caretaking service provider. And maybe something along the lines of, we think that your quality work is not what we thought it would be, or you've had health issues or something, why don't you consider selling your caretaking business to somebody else, taking the cash out and going on, and that might make everybody happy. So having an open discussion about those things is the best way. The body corporate can't, in 95% of cases, the body corporate can't force a change to the property manager without that property manager's consent. So it's not something the body corporate can just go and do. It does need to be a process of negotiation. And that's a unique element of Queensland property or Queensland strata law, is that they're very long-term contracts with the caretaking service providers. How maintenance issues are addressed, so probably covered that before, but the body corporate committee is not omnipotent. They aren't able to see and know about every issue instantly. In fact, a lot of committees don't live on site at all. So if you've got a building that has a lot of investors, often the committee may be investor owners who are relying on on-site owners or the on-site caretaker to raise maintenance issues to their attention. So I would say, if you see a maintenance issue, don't just walk past it, raise it to someone's attention. And that's the best way to get it onto the list. And then it will probably get fixed when the committee has the ability or the quotations ready or can find a contractor to get onto it. How long should a maintenance issue be fixed after raising to the on-site manager? This will depend on how the committee organises its decision making and how complex the matter is to resolve. So if you've got a committee that has a meeting every month, so one of the committees I work with, they have a meeting on the first Wednesday of every month, and they don't really discuss things in between meetings because they have regular meetings. So if you find something, at in mid-month, it generally won't get actioned until the next meeting. So that's different to a building where they don't have meetings and they just meet on demand. In that case, maintenance issue will arise. Someone might need to investigate, get quotes, work out how to fix it, and then call a meeting and get that approved and then get it done. So it depends on what it is, really. If you've raised something and it's been a very long time, and based on your understanding of the issue, it should be a simple fix but hasn't been fixed, that's where you would start to say, why hasn't this been fixed? Is it more complicated than I thought? And can I have someone explain the situation to me? Got a question here about how do we ensure, or what measures can we put in place to ensure that decisions are not met with bias to the people in charge or a friend group who are members of the body corporate. So I put this on here under the power of owners category, because owners can put motions to the AGM, and AGM motions get looked at by every owner. So if you have a concern that the elected committee members are making decisions that are not in the best interest of all owners, or if you think that they're meting out decisions differently depending on different types of owners, which is obviously something that should not be happening, and we work to consult with our committees to guide them in how to make these decisions. But if that is your view, all owners can put motions directly to all other owners. So put an AGM motion forward with the decision or the outcome that you want to see implemented, and you will then see whether a majority of all the other owners support your position or not. That way, because the owners make a decision that can overrule a committee decision, you can avoid that risk that the committee members are, may not be representative of the broader owner body. The other thing I'd say on that is the reason those committee members are there is because the owners elected them. So a lot of the time that is not a real election, because you only have 4 volunteers. So guess what? They're all elected automatically. In that case, if you don't like the way the volunteers are running the show, each owner can volunteer and can be a member of the committee and can make different decisions. So put your money where your mouth is and volunteer to join the committee. If it's a competitive election and you have 20 candidates running for 7 spots, then it in effect shows that the members who are elected are a representative group of the owners. But it's a democracy, so not everybody will like it. And as long as more than half of the people are happy, then that's the decisions made, really. I'd like to purchase a space that is a vacant car park unallocated on the plan. So body corporate plans can have, in limited circumstances, can have some spaces that are unallocated. Often those are allocated as visitor parking, but if that's not the case, so if for some reason there's a spare car park in a building, owners can take exclusive use of that car park if all other owners agree. So all owners in the building need to have the opportunity to vote, and it requires that nobody oppose the grant of an exclusive use area. And it can also come with a monetary payment. So you could say, I want exclusive use of this car park and I'm prepared to pay $10,000 for that privilege. And owners would vote. And if everybody votes yes, then decision made. So it needs to go to all owners because it's a permanent change to the common property, and all of the owners own the common property in a group ownership. So that's why everybody needs to be involved in that decision. Okay, question, is it likely the government legislation will be implemented similar to New South Wales, where a scheme can be terminated if a certain percentage of owners vote for termination? So this is the context where you might have an older building and it's got, on the beach, and 5 owners want to sell to a developer and get rich, and 1 owner says no. Currently in Queensland, everybody needs to agree for a scheme to be terminated or sold in bulk. New South Wales has introduced legislation where buildings which are uneconomical to repair can be terminated if, say, 80% of owners agree. So it takes away that single person who can hold up everybody else, getting a good outcome. I think that's likely to happen in Queensland. It has been discussed at various stages by the government, and then governments change and it drops off the agenda. So it is something that the Strata industry bodies are pushing for because it is a practical solution. But I think if it comes to fruition, it will have a court requirement. So it won't just be 80% of owners can agree and force a sale of the building. It will, I'm confident, need to go through some sort of adjudication process where a judge looks at it and signs off that it is a valid sale, because you can't go back from it. It's a high stakes activity, and the proposed legislation around that, the building would need to be uneconomical to repair. So if you've got a building where your unit's worth $500,000, but you need to pay a $1 million special levy to fix the underpinning or something, that would be a perfect candidate for termination, where it makes more financial sense to destroy the building or sell the building rather than fix it. I don't think it will ever get to the stage where owners can just choose to sell and then force an owner to give up their home. If there's nothing wrong with the building and it's just a preference, I don't think that will happen. Okay, someone needs a rail and sunshade for the pool to allow residents with mobility issues the usage of the pool, especially as we are paying fees for the water and upkeep of the pool. So good question. This is an issue that is coming up more and more in buildings, particularly with aging populations, where the building may need to be retrofitted to have certain amenities that were maybe not needed, or just people got along without them. In this case, I guess the questioner is paying levies to use the pool but is unable to use it because of some physical restrictions. That is a question that should be put to the AGM, or to the committee. In fact, if it's within the committee's spending limit, the committee might do that work. If not, if the committee says it's too expensive, or they just say no, the owner can go directly to all owners. And that's where a good persuasive motion can do wonders. If you write a motion and think about the person reading it, whether it's something that they would find to be reasonable and a good idea, you're going to have a much better chance of getting owners to approve it, and potentially also showing costs. So if you say to me, I pretend I'm an owner, that there's a proposal to add a rail and a sunshade, it will only cost $2,000, and there's 6 people who currently can't use the pool and they would love to use it, well, I would vote yes to that. If it just said we want to install a rail and a sunshade full stop, and I didn't know the reasons or the cost or, what the arguments for and against, I would maybe be a little bit more hesitant in giving a vote, because a lot of owners are afraid of signing, what they perceive to be a blank check. So the way those motions are proposed is really important, because the people who are voting are just normal people, owners in the building like everybody else. And in that particular case, trying to resolve it by consent of the body corporate is much better than trying to resolve that through a dispute. If a body corporate makes an unreasonable decision, then the person can always make a dispute against the body corporate and say the body corporate made a bad decision or an unreasonable decision, and I want that reviewed. So if, I don't know, if you had a building and the smoke alarms were broken and there was a motion to replace them and the body corporate said no, then that would be an unreasonable decision, because it would endanger the building and the residents, and that would definitely be something the adjudicator's office would say, no, the body corporate was wrong and they need to be forced to comply with the motion. So I don't know the answer to this pool question as to whether it would be something that would be a winner or a loser in a tribunal sense, but definitely better to get owners on board and get them to approve it, and then you don't have the friction in that scenario. All right, I've got a couple more questions on here. We'll go through them. I've got some parking things a bit later on, so I might skip those. Who manages the on-site manager and their tasks? So that relates to the caretaking service provider. The committee is the manager of the caretaker. So the committee is the boss of the site. And if the caretaker is not satisfying any of the, or some of the requirements of their contract, it's up to the committee to look at that, have a conversation with the caretaker. That's something that, as a body corporate manager, we can definitely help facilitate, but it's up to the committee to decide what to do about that scenario. And those contracts typically have some performance conditions in them. The first step is always to tell the person that they need to improve in a certain area, and so we can facilitate that discussion. And then if that doesn't resolve it, then it's up to the committee to progress that to the next step. So one of the misunderstandings that some people have is that BCsystems is patrolling the caretaker and is identifying when they are on track and not on track. But we only do that in conjunction with the committee, and where the committee has brought that to our attention, or sometimes an owner might bring it to someone's attention, and then we pass it on to the committee and have a discussion. Okay, I've got a question here. Our complex has a security gate. 11 of the 21 units are inside the gate, while 10 units are outside. Would you expect that those lot owners inside the gate would have a slightly higher body corporate fees than those lots outside? How do I find out if that's the case? So that's a good question. So there's two types of units in this example. There's inside the gated area and outside the gated area. The cost of the gate is borne by all owners in accordance with their entitlements or their shares. So every owner is paying for the gate, but you would expect, or I would expect, that the developer would have taken that into account in setting the entitlements. It's very difficult to look at one issue in isolation. In fact, it's basically impossible to say you pay more because you're inside the gate, because the units outside the gate might have slightly wider footpaths that get mowed by the body corporate, or they might have bigger trees or different construction or something. So all of those issues are blended together when the developer sets the entitlements, and they do not provide the rationale for the setting of those entitlements. So the default is that units should have the same entitlements unless there is a reason that they should be different. So usually, more often than not, entitlements are either the same or very similar, even though the use of that unit might be quite different to the one next door. And it's just very difficult for developers to predict that when they create the building. If it's 30-year-old building, they won't know what the implications of that gate might be in 30 years. So how could they take that into account with costs? So in theory, it's taken into account, but in practice, it's often not done in a way that gives owners a lot of satisfaction. But again, it's just sort of one of the challenges with group ownership. Just like if you're in a high rise and it's got a swimming pool that's very expensive to maintain and you do not like swimming and you've never gone in the pool area, you're still paying for it. So it's not based on use, it's based on sort of opportunity, and there's a whole range of factors in there. But I guess if that body corporate made a majority decision to take that gate away, that would be an opportunity for that body corporate to reduce a cost in the administrative fund and the sinking fund, and maybe the inside units are supportive of the cost reduction as well. Question, can the on-site manager also be an owner? Yes. So a lot of on-site managers are owners. In fact, a lot of the older building agreements, the on-site manager was required to be an owner. So that requirement was often for them to own and live in an apartment or live in a townhouse. That is becoming less favourable nowadays. So most new caretaking agreements that are entered into for new developments, that requirement is usually not in there anymore. But a lot of the existing buildings in Queensland are not brand new. They're often, 5, 10, 20, 30 years old. And a lot of them have not only a coincidence that the caretaker is an owner, but a requirement. And I think the logic there is it permanently ties the caretaker to the scheme. And so they also are paying levies. They're dealing with the same issues that owners are dealing with. And I suppose that puts them in a position to understand and represent the majority of owners in a different way than they would do, or they may do, if they were just coming in more like an employee style, where they come in, do the work and go home. But that, I should also say that in our experience, the quality of the caretaker and the relationship with the committee, it really comes down to the caretaker and the committee working together. Whether they're a lot owner or not, will live on site or not, does not typically make or break those relationships. Okay, we've got some parking questions, so we'll get onto that now, I reckon. I've got a bit of maintenance, which will be quick. So maintenance, who's responsible for cleaning of mould on the eaves and outside the gutters? This will depend on the plan of the building. So typically, most bodies corporate, the outside of the building is the body corporate's responsibility, but not always. So question for the caretaker or the body corporate manager, someone's got to clean it. So it's just a matter of who does. And also, importantly, if you ever get an answer, no, that's not the body corporate's responsibility, that is a double-edged sword, because it means you've got to pay for it yourself, but it also means you're not paying it in levies. And if the next door neighbour has the same problem, you're not paying for their problem to be fixed. So a lot of owners think the body corporate should pay for more, but if that's the case, then the levies would be higher. So you're paying for it anyway, in either way. Is the body corporate including chopping a big tree in the backyard? I just bought a unit end of last year. Did not realize the tree has so much shade. So bodies corporate generally don't do things in yards or courtyards. Typically, those are either part of the lot, so owned by the owner, or they are exclusive use for the owner. And that typically comes with a responsibility for the owner to maintain their own yard area. A backyard's usually owner. In the front of a townhouse, if you've got like a little garden area which is in front of your door but not necessarily within a fence, that could be maybe 50-50. But question for the body corporate manager or the caretaker, we would have a look at the plans. Even if the owner's responsibility is to maintain the tree, cutting down a tree is considered to be a change to the property and often needs to be approved by the committee. So even though the body corporate may not pay for it, it doesn't mean the owners can go and do whatever they want. There are often bylaws that say you can't cut down trees unless the body corporate approves it. And sometimes trees are part of the local council's requirement. So sometimes they have to be there even if they are annoying. Is the body corporate responsible for keeping courtyard trees trimmed? So same question, depends where they are. Trees on the common property, on the common areas, they are the body corporate's responsibility to either trim if they need to be trimmed, or if they're just big bush trees and they're supposed to grow into big trees, then they let them go. But the maintenance of those it follows the person who owns them. If a window is leaking and water's coming to the interior of the apartment, is that a common property matter or the responsibility of the apartment owner? Been told the latter, unless a majority have the same problem. So window leaks or wall leaks, any leaks really, depends on the source of the leak. So if that window that's leaking is the owner's window, so if it's a window from the the kitchen onto their own balcony, that would be an owner's window and the owner would be responsible for making it waterproof. If it was a window, that is the body corporate's responsibility. So on the very outside of an apartment building, a high rise, that would generally be a body corporate responsibility. So again, has reference to the plans. This part of the question was the interesting bit and why I included it, which is that this person's been told that it's a lot owner responsibility unless a majority have the same problem. If more than one person have the same problem, it does not make it a body corporate issue. It either is a body corporate issue or it is not a body corporate issue. If multiple people have the same problem in a building, that may indicate that there's a defect in construction or the windows have reached the end of their life or something to that effect, but that doesn't mean the body corporate takes over the responsibility. So it's quite possible to have 5 windows leaking and 5 owners having to repair their own windows. And there's obviously the opportunity to have the body corporate know about that. It maybe could warn owners, it could try and organize a contractor to fix them all and give a good price for a bulk job. But the body corporate levies would not be designed to pay for that if that is not a body corporate responsibility under the law. The body corporate does get involved in those sorts of bulk problems from an insurance perspective, because if the body corporate goes to the insurer and says, hey, there's 5 people have water leaks through their windows, the insurer will say to the body corporate, okay, well, we're not going to insure your building until you sort that out. So the body corporate sometimes has to tell owners, look, you must sort your windows out and prove that you've done it before we can go and get insurance for the whole building. So the insurance company wants to know that the whole building's in good condition. They don't really care who pays for the problem to be fixed. They just want it fixed because they're insuring something and they want the building to be the best it can be, because that reduces the risk for the insurance company. So they're thinking about themselves, whereas in practice, it's often difficult to get 25 owners to all go and fix their own windows if a whole bunch of people have a similar problem. Building and exterior maintenance. After the inspection, there was no feedback on the property. I brought to the property manager's attention the rotting fence. That sounds a bit specific. I'd suggest that person to contact their body corporate manager directly, but certainly bringing things to the building manager's attention should either result in an answer that says, no, that's your problem, you need to pay for that, or yes, it's a body corporate problem and we'll put it on the to-do list and we'll go through the machinations of getting it approved and repaired. If termites get into fences, who's responsible? Fences generally are the responsibility of the person benefiting from them. So if you've got a fence between 2 townhouses, it's usually 50-50 between those 2 owners. The body corporate is responsible for a fence that runs around the entire outside perimeter of the whole development. So if you've got 250 townhouses, some of those people's back fence will be the back fence of the whole complex, and they'll be the divider between that complex and the school next door or the houses next door. That fence is the body corporate's responsibility, and internal fences within the development usually is neighbour versus neighbour. If one of the neighbours is the common area, it might be lot 1 and the body corporate share that 50-50. So fences are a whole separate topic. We've actually got an ebook about fences because they're so complicated. So if you've got a question, that hopefully guides you to the answer. This one, drain grates make a huge noise when cars drive over. It messes with everything, especially sleep patterns. Have inquired a number of times with the manager who says not much can be done. I would say to this, if humans built the Great Pyramids of Giza, they probably could fix a creaky drain grate, but the question is, how much is the body corporate prepared to spend on it? Are you prepared to spend, $50,000 replacing the whole driveway to solve that problem? If you've raised that and not much can be done about it, maybe it is incumbent on the person who's experiencing the problem to try and come up with a different solution that maybe the committee or the building manager haven't thought about, and put that to the owners and say, this is my solution. Do you agree with me? This is what it's going to cost. Some things are just unfortunate, and the person has to put up with it for a while until an outcome is reached. Approvals. Why can't you have some decorative painted eave color on the front of your own home? I have some, makes it look attractive. It isn't political or religious. The body corporate made this person take them down. So I would say this might sound a bit callous, but we don't care what your properties look like. The body corporate manager certainly doesn't care. It's up to the owners to self-govern. So if a majority of the owners in your building have approved a bylaw that says all of the townhouses must look identical, then that's the bylaw and you have to comply with it. All owners do. If you don't like that bylaw and you want owners to be able to paint their own front door, or put different coloured curtains or whatever it is you want to do, you can apply for approval from the committee, or you could put a motion to the AGM to take away that bylaw that requires everybody's property to be symmetrical or matching. So that rule is not from the body corporate manager or from the law. That rule is about the body corporate and how it governs its own development. And developers always put a bylaw that says you can't change the outside appearance of the building unless you get approval. But that is not a hard set rule, and the body corporate could take that rule away completely if it wanted. But then, your opinion about how attractive something looks might be very different to someone else's, and someone else might go way further than you were thinking and, make it, just be beyond the pale. So you just got to think about what the potential outcomes are from these decisions. Application for improvements or exclusive use, e.g. a lot requesting to put stairs down from the ground floor to balcony to a common property garden area. So body corporate owners can upgrade their own lot. So the property that the owner actually owns, lot owners can make improvements there subject to the bylaws. So if there's a bylaw that says you can't make an exterior change, then you can't make an exterior change unless you get approval. If there's no bylaw, you can generally do what you want within your own lot. So it's really important to know what the bylaws are and how to interpret them. If you want to make a change to the common property, that needs to go through the body corporate for approval in all cases. So if you wanted to install a pond or a water fountain on the common property that you could look out your window, you would need to get the body corporate's approval for that, because you'd be installing something on the body corporate's shared property. The levels of approval are complicated and depend on what you're putting, where you're putting it, who's benefiting from it, and what it's going to cost. And so ask the body corporate manager for some guidance about who to make that request to. Can owners upgrade their front screen or front door or screen door? Usually no, unless the body corporate has approved it, because most of the time the front door and screen door are on the boundary of the lot and therefore are the body corporate's responsibility. And also usually there's a bylaw that says you can't make exterior changes. So you can do it if the body corporate approves it. I'm an owner of an apartment. Am I able to put my own security system in my apartment, which has cameras? I need to drill through walls to run. So this one here, if the camera system is fully within the apartment, that generally is okay. The body corporate, unless there's a specific bylaw prohibiting it, you should be able to surveil your own living room and kitchen. If you want to install a security system that looks outwards at the common property, you would need to get approval from that. So if you're in an apartment building and you wanted to have a camera that looked at the hallway outside your front door, that would definitely need body corporate approval, and definitely don't install it unless you get the approval first. Owners recently voted in favour of installing carports in our complex. I understand this is the first step in a big process. Will BCsystems provide direction to the committee? This is, I don't know anything about this particular building, so I'm answering this sort of on the fly, but the body corporate, it gives effect to those decisions. So if there was a simple motion that the body corporate install carports, that issue would then get remitted back to the committee, who would have to look into it, get town planning advice, get some design plans drawn up and various bits and pieces. So we could have a role of guiding the committee on what some of those might be, but it's not a solution we could deliver out of the box because we're not town planners. So we can talk to the body corporate about how to go about that from a body corporate management perspective, but delivering the project, I would expect one of the committee members or the person who had this idea in the first place to be the driver of getting the quotes and bringing the documents to the body corporate and getting the decisions made at that level. Okay, some bylaws now. So smoke drift. Can I install a screen between my neighbour and I to stop smoke drift coming into my property? And this person's got some good reasons for that. The question about installing the screen would depend on where you're installing it. Is it on your property or shared property? And do you have a bylaw which restricts your ability to do that? The reasons for it, smoke drift, that might be your reasoning to get the approval in the first place from the committee, but it's probably also not a necessary reason. And also, if there's smoke drift and you can improve it or mitigate it with a screen, that sounds like a great outcome for both parties. If that doesn't work, then you might need to progress a smoke drift or a smoke nuisance complaint against your neighbour if they're also a member of your body corporate. And that might be a bylaw issue that the body corporate committee takes up and has to resolve by negotiation or notices. Solar panels. What is the process for getting body corporate approvals prior to installation? The actual process of getting approval, again, I'd mention our website forms where there's applications for various improvements like solar panels or lot improvements, and that then goes to the committee. Solar panels can be a bit trickier because in most bodies corporate, the body corporate actually owns every single roof. So your townhouse's roof is not necessarily your roof. It may be a body corporate owned piece of property, therefore body corporate maintained and body corporate approval required for you to go and put solar panels on that roof. So that's why there's a whole process there around solar panels. They also trigger usually a general meeting decision, so an AGM, because they're over $3,000, and so they're considered a major change because solar panels are just an expensive thing to install. So the process of getting approval is get a quote, get a diagram of where they're going to go and how many there will be and what the cost is, submit that to the body corporate, and you'll get an answer back as to when and where that matter will need to be considered. If it is needing to go to an AGM or an EGM, we can generally advise what time frame that will occur in under the AGM cycle. If you want to get it done earlier, some bodies corporate allow owners to pay for the cost of a meeting in order to have a special meeting just for that owner's benefit, and therefore give them an earlier decision. And if you're desperate for solar panels, then that cost might be something that you're prepared to pay instead of waiting for the normal procedure. Benefits to a body corporate for units to get solar systems. There's really no benefit to a body corporate if individual units have solar panels, because the solar panels feed the unit directly and the body corporate still has to pay for its common area, lighting at night and pools and things. If the body corporate has a high demand for electricity during the day, so if it's got a lift and if it's got somewhere to put solar panels, the body corporate might decide to have its own solar panel system, which provides for the body corporate's electricity, and that would be separate to a system that owners install on their own townhouses in order to get electricity, for themselves. So the body corporate doesn't necessarily benefit from individual owners putting in individual solar panel systems, and in fact, the body corporate as a whole may have to pay more for insurance because solar panels are regularly damaged in hailstorms. And so insurers often charge a higher premium if you've got 70 townhouses and 50 of them have solar panels, there's just more risk for the insurer. So all of the owners would pay for the increased insurance policy. Privacy screens in front of general parking, outside houses, rubbish cleanup in gardens, area to put. So this question, I think, is about the physical constraints of the site. So if you come into a development and it's got issues that you perceive could be better. So if you've got, parking in a particular spot and you think it should be signed differently or have different things to do with it, put a motion forward. As you now know, you can put that to the committee or to all owners at a general meeting. If it's something about, rubbish need an area for bins to be picked up, maybe that's a diagram to create a concreted area in a spot that you think would be suitable, and you see what the other owners think of that idea. This question, do I need to get approval from the body corp if I want to get a patio installed to the rear of my townhouse? Definitely, that would be an exterior change, also possibly on the common property exclusive use, and it would be structural and would need to be disclosed to the insurer. So that one would definitely need to go to the body corporate for approval. And something like a patio sounds to me like more than $3,000 worth, so probably needs to go to an AGM as well. Why do some of the townhouses have parking in front of them? Gives no privacy to the owner of the property. Look, that one's just the design of the building. The body corporate doesn't design the buildings. The body corporate inherits the buildings from the developer and has to work with them. So if the developer or the architect or the planner thought that was a good idea, so be it. And that doesn't mean the body corporate is prevented from making changes. So again, comes down to motions. And then also, if you're making changes to developments, they are set up and council approved. So some changes, in fact, quite a lot of changes need to be given back to council for a second approval. So the classic one is buildings that want to create more car parking, more visitor car parking, and turn garden beds into car parking. That is, whilst it might be a great idea, Brisbane City Council or the local council might have a minimum area of garden beds for that development. And so that might be the reason why it can't proceed, or maybe that approval needs to be made to Brisbane City Council and see what they say. Bylaws. So how to enforce visitor parking to stop residents parking their vehicles. If anyone on the chat has the answer to that, please tell us, because it's always challenging to get people to follow the rules. There are rules for a reason, and the only available solution to enforcing bylaws is to write to or speak to the people causing the offence if you know who it is. If you know who it is and you've spoken to them and they ignore the request, write to them more formally. And then there is an adjudication process available to a body corporate for a bylaw dispute, which should be considered the third step of bylaw enforcement. So if you've already made the person aware of the bylaw and they are ignoring the rules, there is a process to compel them to comply, and an adjudicator will make an order that they should not park in the visitor parking or throw their rubbish on the floor or whatever the bylaw issue is. And if they don't comply with that order, they can go off to the magistrate's court and get fined. So there are processes to go through for these things. The issue with them is that they're generally not very practical and they're not quick. So if a body corporate has a resident parking in the visitor parking today, it has to rely on their goodwill in order to change their behaviour. If you've got someone who's really difficult and does not want to listen to you at all, it would generally be 6 to 12 months before you get an adjudication order against that person, which means you've got to put up with their behaviour in the meantime and try to manage around it. If bylaws state nothing is to be left in common areas, can those items be removed by the body corporate? I would say the body corporate should not throw anything away, but probably could remove bicycles, chairs, and give them back to the person who put them there. If there's something that's appeared on the common property and it appears to be rubbish, it probably could be disposed of. But there are plenty of buildings that have, like they might have a bicycle rack, and over the year that accumulates a whole bunch of miscellaneous bicycles. The best way to deal with that is to write to all of the residents or put a notice board up or something to say, come and get your bike. Otherwise, at the end of the month, we're going to take them and give them to a charity. So there are ways to address that. But if you know that it's a specific person who's left something there, you're best to go through that bylaw process with them. Noise restrictions and noisy neighbours. Same thing with resident parking. It's a process of talking to the person. If that doesn't work, asking the body corporate committee to send them a formal notice. If that doesn't work, going through the adjudication process. And you'd, in that case, have to demonstrate the issue. So you'd have to have a recording or a diary or something so that it doesn't become a he said, she said argument. But again, very difficult. And the body corporate does have some powers to issue notices. Most people try and do the right thing most of the time. So notices do work sometimes, but they don't work all the time because there are plenty of people who we all know in our lives who don't care what they get told to do. They just do whatever they want. So if you've got one of those people as your neighbour and they're making a nuisance, then I'm sorry to say there's probably a long road ahead of you before that gets resolved. But ultimately, if you're prepared to put in the time and the effort to navigate the body corporate legislative processes and adjudication, there should be a light at the end of the tunnel for any bylaw matters. Scheme. I understand the scheme cannot prevent pets, but can they regulate restrictions? Yes. So pets can't be banned completely, but you can say to an applicant for a pet, look, you can have the pet, but if you have the pet in the lift, it must be on the leash, and the pet is definitely not allowed to go in the swimming pool. So you can definitely have conditions on pets. It's not just a free for all. If people do have a pet, they need to comply with the rules. And those conditions, we've got a template set. If any buildings are interested in them, we automatically put our set onto any pet application. But if your building has specific requirements about, your building might have a tennis court or something unusual about it that you want to have a specific rule for, that's something the body corporate committee can adopt and can put in your own bylaws. So that specific rule would apply to your body corporate. Can owners object to another unit operating AirBNB from residential premises and the owners not living in the premises? Probably. Airbnb is a big and interesting topic at the moment in Strata because it was not the purpose for which these buildings were developed. It just didn't exist very long ago. So it's a relatively new challenge, just like electric vehicles. It's something that's arisen, took everybody by surprise, and nobody has a clear answer for it. But there are some signs that Airbnb is considered to be a town planning issue and could be dealt with potentially in bylaws with conditions and trying to manage the nuisances created rather than banning Airbnb completely, because usually the problem with Airbnb is not the Airbnb itself, it's the fact that residents often don't know the rules, or they might be using it for parties if it's in a central city or Fortitude Valley location. So that might be more of a noise issue rather than Airbnb issue, but definitely something to do some further research on because I don't have a neat answer for that one. And the last question for the night is I'd like to understand why vehicles are not towed when they continually breach the rules and park overnight. I have a 3-month log. So vehicles and towing, the body corporate can only enforce bylaws that exist in the body corporate CMS, and its only power for enforcement is to go through those notice processes that we talked about. So the body corporate can't just go and tow cars, even if they're parking in violation of the rules. So the body corporate must follow that process where you issue the notices and apply for the adjudication. If the adjudicator tells you you can tow, then you can tow. But generally, whilst towing would obviously solve the problem very quickly, it's not something that's available to the body corporate because the body corporate is just a fundamentally different entity to like a shopping centre or a car park owner where they own the land outright and it's a trespassing issue. In this case, the body corporate owns the land, including the person parking there as a part owner of the land, and they are regulated by bylaws. So there is a different process to be followed. Nobody in the industry likes the process, but it's something that we're stuck with until the legislation changes. Question is, what if the cars are deemed unroadworthy? Are there exceptions here? No. So if the issue is parking in the visitor car parking space or parking on the common property, then it doesn't say that that only applies to either a registered or roadworthy car or unregistered unroadworthy. So if it's a vehicle, you go through the bylaw process and you apply for an order or an adjudication order that that car be removed. The person would have to then remove it. If they don't remove it, off to the magistrate's court. So if it's junk, we have had schemes that have cars abandoned in them where it's nothing the body corporate has done wrong. Someone's just taken a car and just dumped it in the visitor parking of a building and have left it there. It's probably not even from a resident at all. In that case, the problem is the body corporate doesn't know who to enforce the bylaws against because it doesn't know who owns the car. So if the body corporate has a mystery offender, what I would suggest most buildings do is take a lot of photos of the car, post it to, in the notice board of the building or in the lift, or send it out to all the residents and just give repeated threats to say, if this is your car, it's going to be towed on this date, because what you don't want is to tow someone's car and it gets sold for scrap or it gets damaged by the tow operator, and then someone turns up saying, I've been overseas for 3 months, that was my car, where is it, and I want it back. So there's just a lot of risk in towing, and bodies corporate actually get penalized for it and sued by people quite regularly. So that's the difficulty there. It's certainly not a lack of desire to solve the problem. It's just the systems available to bodies corporate are pretty restrictive, and I'd certainly be in favor of a rule that said a car that's been in the wrong spot for a month could just be towed. But we'll see whether the legislators come up with a solution that's more streamlined. And that is, I think, it. I know we've got a lot of information covered. If anybody's got any last minute questions, you can shoot them at us. And I want to appreciate everybody for staying on the line for so long. I went way over time, but we can cut this up and use this video and distribute it to people, and you can look back at the chapters if you wanted to hear something again, or send it to a friend. So we're recording it for your benefit, also for ours to have it on file. So if anyone's got any last questions, pop them in the chat. Otherwise, we'll sign off and see most of you in our day-to-day management of your buildings. Can you remove visitor parking? That might solve the issue. Well, that's a good idea. I like that thinking outside the box strategy. The answer though is no. Council makes you have visitor parking so that you don't clog up the streets. All right, thanks everybody. We'll end the meeting now, and if you think of anything you've missed, you know how to find us, and you can reply to the invitation with any other follow-up questions, and we can do a version 2 at some stage in the future. So thanks again, and enjoy your evenings.